Hey everyone, welcome back. We all know time is precious, especially when you're trying to stay ahead in the markets. You want those key insights without wading through endless noise, right? Well, that's what we're all about. Cutting through the clutter to get to what truly matters. Today, we're going to do a deep dive on this really fascinating article from The Motley Fool.
Sounds good.
It's about Nvidia, the company that's basically powering this whole AI surge we're seeing. And there's this one analyst who's making a pretty bold prediction. He thinks their stock could skyrocket by, get this, 600%.
Wow.
Yeah, maybe even reaching a $20 trillion market cap.
That's a huge number.
It is. It is. And, the article points out that this prediction comes at kind of a pivotal moment. We've just seen the NASDAQ pull back a bit after, a pretty strong run fueled by optimism around things like inflation easing, the possibility of lower interest rates, and, of course, all the excitement around AI. So the Motley Fool suggests that this correction, this little dip, could actually be a good thing. It might be a chance to buy into companies like Nvidia, companies that are really leading the charge at a bit of a discount.
I see. So like a potential buying opportunity.
Exactly. So what we want to do today is really dig into this whole $20 trillion valuation idea. Is it realistic? What's Nvidia doing that makes this even remotely possible? What are the arguments for and against it? Let's break it all down. So first things first, why don't we start with where Nvidia stands right now? What have they been up to that's generating all this buzz?
Well, there's no doubt that Nvidia has become, like you said, kind of the engine behind this whole generative AI revolution. Their graphics processing units, GPUs, are now essential tech.
Yeah, and not just for gaming anymore, right?
Exactly. I mean, gaming was their bread and butter for a long time, but now it's so much more than that. Their GPUs are crucial for things like cloud computing, all the complex calculations involved in machine learning, and especially these massive data centers. The ones that are powering all these AI advancements we're seeing.
It's pretty amazing to think that they were the pioneers of the GPU. I mean, we're talking way back in 1999.
Yeah, 1999.
And the article really emphasizes how their breakthrough was this concept of parallel processing, which was a big shift from the traditional way CPUs work.
Right. So traditional CPUs, they kind of tackle tasks one at a time, like a single worker trying to do everything. But with GPUs, it's more like having a whole team working simultaneously. They can handle tons of calculations all at once, which makes a huge difference for these computationally intensive tasks.
That's a great way to put it. So by breaking down those complex calculations into smaller chunks that can be processed at the same time, GPUs get a huge speed advantage.
Exactly. And that capability has become so essential not just for the amazing graphics you see in games, but also for things like high-performance computing. The kind used in scientific research, data centers, cloud platforms, and even the training of those really sophisticated AI models.
So their hardware's obviously top-notch, but the article also talks about the importance of Nvidia's CUDA platform. Now, for anyone who might not be familiar with that, can you explain what CUDA is and why it's given Nvidia such an edge?
Sure. CUDA stands for Compute Unified Device Architecture. It's basically NVIDIA's own programming platform and software architecture. So it's the toolkit that helps developers use the full power of those GPUs.
Okay.
And NVIDIA has built this incredible ecosystem around CUDA, with over 400 specialized libraries, as the article mentioned. And these libraries, they have all these pre-built functions and tools that make it much easier for developers to build, optimize, deploy, and scale their applications, whether they're working on a laptop or a massive supercomputer cluster.
Wow.
It's a lot.
That sounds incredibly useful for developers.
It is.
So because CUDA has been adopted so widely and it's so integrated into the whole computing industry, it's kind of become the industry standard, right?
Yeah, pretty much. And that's a really significant barrier to entry for competitors. It's not just about making a better chip anymore.
Right, right.
You also need to convince developers to switch over to your whole new ecosystem.
Which is a tall order.
It is. It's like trying to get people to learn a whole new language when they're already fluent in another one.
Okay, so we've established that NVIDIA is a real powerhouse, a dominant player. So now let's talk about that really bold prediction, the $20 trillion market cap.
Okay.
The article says that as of, let me check my notes here, March 10th, 2025, NVIDIA's market cap was around $2.6 trillion.
Right.
So to hit $20 trillion, that means their stock price would need to jump by something like 664%.
That's a massive leap.
It is, it is.
So the article mentions that Wall Street analysts are forecasting NVIDIA's revenue to hit almost $204 billion in fiscal year 2026. And if you look at their current market cap, that gives them a forward price to sales ratio, or PS ratio, of about 13. So Assuming that ratio stays the same, which is a big assumption, to get to that $20 trillion market cap, Nvidia would have to be making around $1.5 trillion in annual revenue.
Wow. That's almost hard to even fathom.
It is a mind-boggling number.
And the article says that analysts are predicting Nvidia's revenue to grow by about 50% each year for the next 5 years.
Right.
So if they were to keep up that pace, which is incredibly high, they could theoretically hit 20 trillion by, 2031. But the article is also quick to point out that a lot of things would have to go perfectly for that to happen.
Absolutely. I mean, maintaining that kind of growth rate, 50% year after year, with a revenue base that's already in the hundreds of billions, it's incredibly difficult. Economic conditions could change, new competitors could pop up, there could be some unforeseen tech disruption that changes the whole game. All these things could factor in.
Right. So it's a reminder that these long-term projections, especially ones this big, they're very speculative. I mean, it makes you think about just how transformative those growth drivers would have to be.
It does.
So let's talk about the person who's making this prediction, Wall Street analyst Phil Pinaro. The article says he's the founder and former CEO of Boston consulting group Platinian, so he's definitely got some serious credentials. And he's the one who thinks Nvidia could reach $800 a share by 2030.
Right, which would get them close to that $20 trillion market cap.
Exactly. So what are the key factors he's basing this on?
He's got three main drivers. The first is that he believes the current adoption rate of AI is less than 1%. His argument is that even a small increase in AI penetration, moving into those low to mid-single digits, could lead to a huge jump in Nvidia's value. He's basically saying there's this massive untapped market for AI solutions across pretty much every industry.
And that makes sense. We're seeing AI being used more and more, but it still feels like we're just at the beginning.
Yeah, absolutely.
So what's his second point?
His second point is all about the transition to Web 3, the next generation of the internet built on blockchain technology. He estimates that businesses will invest around $10 trillion between now and 2030 to make this shift happen. And he says that only about $1 trillion has been invested so far.
Wow.
So he sees that as a $9 trillion opportunity, specifically for data centers.
Right.
And since Nvidia is a key player in providing the computing power for those data centers, they stand to benefit big time if Web3 takes off.
Okay, so that's another huge potential market for them. What about his third argument?
The third one's interesting. He talks about the Department of Government Efficiency, DOGE, and their efforts to cut down on waste in government.
Okay.
He suggests that things like creating digital twins of government infrastructure, basically virtual replicas, could really change the way government works. And he thinks that could create a lot of demand for Nvidia's advanced computing capabilities.
So government efficiency initiatives could actually be a significant driver of tech demand. That's a really interesting angle.
It is.
Okay, so Panaro's prediction is based on this idea of relatively low AI adoption right now, the huge potential of Web3, and even government modernization efforts. It paints a very optimistic picture.
It does, but the article also brings up some important counterpoints. It talks about the potential challenges and the volatility that's just inherent in the market.
Right.
The author, Danny Vedana, he points out that the current market conditions, things like inflation, consumer demand, geopolitical uncertainty, even the pace of AI adoption, all these things could create headwinds for Nvidia.
Absolutely. And we've all seen how quickly things can change in the market. Sentiment can shift really fast, often due to things that are totally outside of any one company's control.
Exactly.
And the article reminds us that Nvidia's stock has been volatile in the past. They mentioned that it dropped by 66% in 2022 when there was that broader economic downturn. So it's a reminder that investing in a high-growth company like Nvidia comes with a certain level of risk. It's not going to be a smooth ride all the time.
No, definitely not. And it's important for investors to understand that. The potential rewards might be high, but the journey to get there is likely to have its ups and downs.
Right. But even with those potential challenges, the article frames this recent NASDAQ correction as a possible entry point, a chance to buy in at a potentially lower price.
I see.
They mentioned that at the time the article was written, Nvidia was trading at a forward earnings multiple of less than 24.
Okay.
And for a company with their growth potential, that might be seen as pretty attractive.
Yeah, that's definitely worth noting.
Yeah.
It suggests that the market wasn't getting carried away with overly optimistic expectations.
Right. And it's interesting that the author himself says he's a long-term Nvidia investor and he's still bullish, even though he knows there's going to be volatility.
Yeah, that's pretty telling.
So to sum it all up, we've talked about Nvidia's dominance in these really important tech areas, the ambitious $20 trillion prediction, the potential bumps in the road, and the optimistic view of this Wall Street analyst.
Yeah, it's a lot to consider. What stands out to you as the most important element here?
For me, it's the sheer size of the opportunity presented by AI and Web3 coming together. I mean, even if Nvidia doesn't hit that exact $20 trillion figure, the potential for growth over the next few years seems really substantial. But of course, it's all about balancing that potential with the risks and making sure it fits with your own investment goals and how much risk you're comfortable with.
Absolutely. And that brings up a final thought for our listeners. We've talked about the projections and the factors discussed in the article, but what about the things we haven't considered? Things that could pop up in the next decade and really shake things up for a company like Nvidia.
Right.
Given how quickly AI is evolving and how the internet is changing, what other opportunities or challenges might emerge? I mean, think about how these tech shifts could create entirely new markets or disrupt existing ones, and how a company like Nvidia might have to adapt and innovate to stay on top.
That's a great point to end on. Lots to think about. Thanks for joining us for this deep dive.
It's been a pleasure.
We'll see you next time.
See you then.